Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2023 in New York City, and joining us for this segment, we have Evan Weiss, Head of Business and Policy at Alluvial, to discuss navigating the uncharted waters of staking regulation. Evan, it's great to have you with us. Welcome to TradeTalks.
Thanks for having me, Jill.
What level of adoption are you currently seeing within the staking space?
The past year has been incredible. Even though the crypto bear market has kind of assumed a lot of the crypto space, we're seeing a ton of adoption in the staking space. And so with the recent upgrade of the Chappelle upgrade for Ethereum, where you can now withdraw your staked Ethereum, we have about $42 billion of staked Ethereum. That's about a 98% increase in staking rates. And so that's a huge amount of adoption, I think shows just the general demand for this product in the market.
What's the most significant regulatory challenges that you're seeing in staking today, and how that's impacting the builders, the stakers, the institutions? How is that influencing the stake landscape?
I think we've seen a lot of kind of recent regulatory developments, especially around kind of SEC developments around staking, thinking about some of the major centralized exchanges that have had either cases brought or settlements, like Kraken, Coinbase, and Binance. It's brought a lot of kind of uncertainty into the market about how these products can be offered. We fully believe that staking is a technical service that can be brought to retail users in the market, but the regulators have kind of taken a different stance, and so we're working really hard to kind of educate them, and people, some of the biggest companies in the world now are working through either court cases or on Congress to really try to make staking accessible to everyone.
So in absence of clear regulatory framework, how are industry leaders collaborating, I guess, to self-regulate themselves? Because we know the technology is there, we know staking, I mean, you said the increase before, so it's happening.
Yeah, so we have, in 2018, we actually worked with SEC to release some industry principles, and I think we're going to be needing to do the same thing here shortly. And so we've been working with a lot of the industry leaders to kind of come together, and given that we haven't received any, guidance or best practices, it's really our job as an industry now to come to set those standards. And so I think you'll expect to see something from us in the near term that really helps provide some best practices so that users and consumers are protected, but also we can grow this now $92 billion market in the US and really make it a huge part of the US economy.
So what are the most common misconceptions and misunderstandings regarding US staking regulations, and how can participants and the public distinguish fact from fiction?
It's a great question. One of the big misconceptions that we hear a lot is staking is lending. This is the same thing actually SEC Jerry Gensler has actually said publicly, is that staking looks a lot like lending. But these are really, really different risks. When you think about staking, it's a technical service. I stake my tokens to a validator, they run computers on the back end, they have no discretion, ability to move funds. When you think about lending, it's a very different risk profile, right? I'm giving you money, you have the ability to send that to other people, and the risks are very different, and so they need to be regulated in different ways. And so that's one of our jobs as an industry, to help educate people and say these are totally different things. And I think there might be a little bit of bad faith there and kind of construing those to be the exact same things, because they're really, really different risk profiles.
Didn't we hear issues with staking where yields were just, even hard to comprehend, like 14%, 15%, 16%? That kind of sounds like it's a little bit too good to be true. Is the industry getting a handle on this?
Yeah, I think that is one of the hard parts. You look at the Ethereum network today, we're about a 4 or 5% network rate. Mm-hmm. But one of the early concerns a lot of regulators had with staking was, I'm offering a 98% yield on a token that's going to go down 98%.
Right.
And so I think as the industry, it's important for centralized exchanges to kind of help educate people on the risks of some of these smaller tokens. But when you think about something like Ethereum with a very kind of set inflation rate, a very set base of investors and users in the network, I feel much better about kind of some of the consumer protections there.
Well, of course, if you have regulatory framework, there you go,
exactly,
right? It's not the wild, wild
west.
So looking ahead, what do you anticipate in terms of getting a regulatory framework in place as it relates to staking, and how do you think that could impact the space?
My feeling is that the path is through Congress at this point. We're seeing movement on the market structure bill, the stablecoin bill. I really think that, when you think about staking, it's, like I said, $92 billion today. When I first started working on this stuff in 2018, we're talking tens of millions. And so that's incredible growth, especially when you think about, being in a bear market today. And so I think Congress is waking up to this being a huge industry in the US, and my hope is that we can use some of the principles we're developing to kind of develop some common sense regulation that really protects consumers, but also ensures that this industry can grow here in the US.
So with that said, where does Alluvial sit in the ecosystem of staking?
Yeah, so a lot of people are familiar with Lido, and so what we're building is kind of similar, but it's more of an enterprise grade, and so we have a really strong compliance and security kind of posture. You can think about Liquid Collective, which we're building, is very similar like a USDC, but for liquid staking.
We appreciate the insight. Evan, thanks
Thank
for
you
joining
so
us on
much
Trade
for
Talks.
having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.